Yeah, again, net profit before tax and extraordinary items. If surplus, that is balance in statement of profit and loss is given. That means in simple terms they have given balance sheet. Balance sheet. So here first we are going to take surplus that is given in statement of P&L, or surplus that is statement balance in statement of P&L. Closing minus opening, that is nothing but current year minus previous year. If you are given 23, 24, so 24 minus 23. Now add, what are the things? That is again saying, if provision for tax is given in current liabilities, provision for tax, which year? Current year again, current year, but this time 2 years information will be given. As balance sheet is given, it will be given previous year and current year. If 22, 23 is given, so 22 is previous year, 23 is current year. Next, plus transfers to reserve. Now I told you, transfers to reserve. Sometimes what will happen is, you will be given surplus that is balance in statement of P&L and notes to account. So whenever balance sheet is given, notes to accounts will be given. So surplus that is balance in statement of profit and loss, you will be given in balance sheet, previous year and current year, and down they will give you reserves, general reserve, reserve fund. Securities premium, if it is there, it will go to financing, but only reserves, that is general reserve, reserve fund, if it is given. So difference of that two, that is previous year and current year difference, that is considered to be transfers to reserve. That also we are going to add it separately. Your surplus that is balance in statement of profit and loss, closing minus opening, and then transfers to reserves. Then we add proposed dividend, which year? Same thing, proposed dividend of previous year. Then we add final dividend. Now final dividend, be careful, sometimes proposed dividend is given, dividends paid is given. So dividends paid is given, 1 year information, that is considered to be your added in your first step of cash flow statement for calculation of net profit before tax and extraordinary item. Same thing is deducted in the financing activity. Plus interim dividend. Mind you, interim dividend, they won't give you 2 years, but sometimes if they give 2 years, always interim dividend is paid in between two balance sheet dates, and it is paid to equity. So whenever interim is paid, you need to pay preference shareholders as well. And interim dividend of current year, usually if 1 year information is given, it is assumed to be current year paid. So then in that particular year only interim dividend will be paid. So always think, if previous year, current year both are given, only current year you are going to take. Only current year you are going to take. Interim dividend of current year is to be added. Then we are going to subtract. Same like income tax refund. That is in brackets I am putting, that is indicating it is to be subtracted. Then less your claims from insurance company. That is to be again deducted. Whatever balance which we get, this is considered to be your net profit before tax and extraordinary items. Step 2. Now we need to go ahead with calculation of operating profit before working capital changes. Working capital changes. Now this part onwards, that is step 2 onwards, we can take it in cash flow statement. And first we are going to take up your as per step 1, that is net profit, or first we'll write cash flow from operating activity. Cash flow from operating activity. So net profit before tax and extraordinary items, which we did it in step 1 and step 2, that is net cash flow from operating activity. Step 2 onwards we can take it in cash flow statement. If there is no extraordinary items and all, if only directly surplus, that is balance in statement of profit and loss, you will do surplus, that is balance in statement of profit and loss, closing minus opening. Or if extraordinary items are there, net profit before tax and extraordinary items, as per you can write step 1. Then we will add a step 2 starts with calculation of operating profit before working capital changes. That is, we are going to add non-cash, non-operating expenses. Non-cash, non-operating expenses. That is, we take depreciation and amortization. We need to add this amount. Then we are going to add loss on sale of asset, loss on sale of investments. Next, we are going to add your interest paid. Now interest is paid on borrowings or on debentures. Of course, just like your proposed dividend, this interest paid on borrowings and on debentures will again go to financing activity. Next, now for subtraction, we are going to take non-cash, non-operating incomes, non-cash, non-operating incomes, that is gain on sale of asset minus rent received, comma dividends received. Now loss on sale of asset is added or investment is added, but gain on sale of asset, gain on sale of investment is deducted. Rent received, dividends received are deducted. Now there are chances where, sir, loss on sale of asset which I am talking about, it includes both tangible and intangible. And here also gain on sale of asset or investments, when I am talking about, it is tangible assets and intangible assets. Now once if you add and deduct the total amount when you get it, this addition and deletion of these two items, or this non-cash, non-operating expenses are added, non-cash, non-operating incomes are deducted. This final amount, either it can be deducted or added. Whatever balance which we get, it is considered to be calculation, or it is considered to be operating profit before working capital changes. Operating profit, or the balance which we get, operating profit before working capital changes after addition and deletion of this. I hope you have understood. I am explaining the format as such. Coming to non-cash, that is operating profit before working capital changes, which I am talking about. This is telling you that there may be, I have one student or few students ask me, sir, we get a negative balance. Let us say this is 1 lakh and this is coming as 1,20,000 negative. That is, your minus is greater than your plus. So you are getting negative 20,000. Still you consider as operating profit before working capital changes. We write the statement as operating profit before working capital changes, but we write it in bracket. That indicates it's a loss. But we don't write loss before working capital, operating loss before working capital changes in the format.